Okay, guys, so it looks like I thought I was recording this whole time, and I wasn't. I actually had paused the recording, and I literally outlined everything that I was going here. So I know you guys might not believe me, etc., but kind of really mad at myself right now. So essentially, I literally went down when the CPI came out. I know it's hindsight. I know this BS. I'm just trying to learn for myself. I know I was not actively in the markets today, but I'm gonna give you kind of like a breakdown of what happened, or a fast version. All right. So I see the CPI moving aggressively. I see this BIST here. I wouldn't trade it is because it didn't go above the 50%. The reason why I would still be looking at the buy side before even it reaches there is because the market moved aggressively upwards. So I want to follow where the momentum is at. So if the momentum is going higher, I don't want to short it yet. Until I start seeing the momentum dying out, then I might be interested in shorts. So here, there's no real play here for shorts or longs. I think it's overextended. I personally didn't see a decent pullback for me to enter and say, you know what, I'm gonna play the buy side. I'm gonna be honest with you guys. I didn't see any trade there. The market kind of went sideways until probably until New York Open. We tagged this BIST. I actually pulled a fib when I was actually recording, when I thought I was recording, but I wasn't. I pulled a fib for here to here, and as you can see, it's 4173.50, and then the high of this candle, it's going to be 417.25. So one tick away from actually being the 50% of this our SIBI. It's too precise in my opinion. Then we start getting a little breakdown of the market. We have this minor breakdown. I wouldn't short it just yet because I think this huge move, you need a greater displacement to the downside. I won't short it just because I see a little move lower. So I want to see a deeper move, a retracement, then I would enter. Let me actually check. I'm actually recording this time because I'm really mad. I literally recorded like 2 minutes of the whole audio, and I recorded for like 30 minutes. Super mad. Okay, cool. Then the market essentially made everybody who got short here or ended up getting short, the market essentially stopped them out. As you can see, I can zoom in here. So the market had a little retracement, stopped everybody out. There's no trade for me. I want to see it deep. Like I said, I want to see a greater displacement. Think about how I see it is when the market moves in high waves, I want to also be in participation of the big waves. I don't want to be part of the small waves. So here, the move is clearly to the upside. There's no reason for me to short it yet, you know? So that's kind of where my mind is at. I wouldn't short this. It's too shallow for me, in my opinion, and how I like to trade. So until like we get the New York Open, which essentially opens at here 9:30, we actually finally get a displacement lower. I'm not gonna chase this move. So I'm a very, very defensive trader. So this whole move, you can say, oh shit, you missed the upside and the downside. No, in my opinion, what I'm seeing is that, okay, cool. The market moved higher, then we actually got the displacement lower. So what I'm waiting for now, I'm waiting for my own trade. I'm waiting for a area where I can trade where it makes sense in regards to a 50% equilibrium or a fair value gap. So essentially, I pulled a fib from here. Shit. I pulled a fib from the highs, which would be here. I'm going to use the bodies to the lows, and then this is 50% here, 4155.25. This is 0.62, the 0.618 and 0.78. Okay, cool. So I start seeing where would be my areas of interest. So this is too easy. This is a 50% of the whole move. Let me actually move this. This is 50% of the CPI move. Cool. So this is 50% of the CPI move, but then this is 50% of the downside move, displacement that I'm looking for. Okay, cool. So for me to even put on a trade or look for a trade, I would need the market to go above this 4155.25. So the first SIBI that I'm looking at is this SIBI right here, from 458 all the way to 4156. This 2-point move area I'm looking at, but ideally I would want to wait and see where the market actually wants to take me. Or was it? I think I actually put my fib on the wrong spot this time. Yeah, I got the most dynamic move. So this, yes, was considered the initial move, but the first time I did this, and I'm gonna quote you guys again, I actually got this move. Why? Because this was the actual displacement lower. So yes, the 50% was on this SIBI right here, 415. 463.50. The second was around 416 56 and 75, and then we have another one at 4. So many lines now, it's getting confusing around here. 416.50. I'm gonna take the fib to move the fib. So essentially the market traded back into this order block, which the order block that I'm talking about is this one, because we had upward candles and then we had displacement lower. You could essentially even say the New York Open was an order block, just because this two have more aggression to them, but just because I'm going to use this whole block as the order block. Everybody has different ways they see the market, so that's kind of where I'm at. So when the market tagged this CPI, I entered. Not physically, I didn't enter it, but mentally, if I would have actually been here, I would have entered here, you know, and my stop loss would have been at the highs. Usually ICT talks about how you should put your stop above the CPI, just because it's CPI or when it's FOMC, I like to make my stop wider. Ideally I would even put it all the way at the highs from here, but I said F it, let me kind of put my stop here. If I get stopped out, it's fine. So I put my stop here. I entered at this order block. We barely touched this, so essentially I would have not entered here, probably like a little lower, but ideally this is my zone where I'm looking for. Okay, so this is kind of my trade. The market is moving lower, so this is where I was actually on my recording. As you can see, I haven't seen it actually get my stop loss hit or my TP hit first. So and I was explaining what I would feel like, or what I would have anticipated this move lower. Like, I'm inside the trade. Would I panic sell right now that the move is still my favor, or will I still wait? So personally, I would wait it, yes, because I see displacement lower and I start seeing CPIs being formed. I see this CPI right here. I'm gonna delete it, but essentially I start seeing these market structures that it gives me conviction that I want to stay in this play. At least my first target, take half of my position off is here. It's because there's sell side at the lows, and then it's too close, like, or too clean, doesn't matter. So there's low, this has to get swept, especially now the market show displacement to the downside. So I'm going to continue fast forwarding it. Okay, it wants to move higher. Okay, displacement upwards. We're going to fill in this void. We're going to go lower. And then this whole time, I actually forgot to tell you guys, but my first time I actually did the recording, I actually said we're in silver bullet time frame. So from 10 to 11, this is the silver bullet time frame. Okay, so ideally, if you don't trade anything else in your silver bullet, this could have actually been a trade, but let's see if it actually works out. Okay, looks like the market actually wants to go in my favor. You see how this is one thing ICT talks about a lot in his videos. Many times when a lot of people enter the trades, the moves have already happened, which clearly, yes, the market moved higher aggressively and it moved lower aggressively without really hesitating a lot. Here, the market is gyrating back and forth to kind of frustrate traders, because many traders wait until 9:30 open to get inside trades. So the market will be harder to trade because there's going to be more manipulation and it's going to be harder to trade it. So it makes sense why the market did drop, but then it had this from 10:20 all the way to 10:40, almost a 20-minute period where it was kind of like playing with traders' feelings. You know, people who got short, they're like, oh shit, this actually is it reversing? Should I get out? People who got long, because there's always people thinking that you should go long. So let's say because they saw this supply demand zone here, and then they entered and then it reversed on them. Whatever it is, there's always going to be traders on the other side of your trade. So it tries to trick both sides. So that's why it kind of gyrated back and forth before actually hitting my first TP. But this is my first TP. My second TP, I'm going to call it out or bring it out to your guys' attention before. It's in hindsight. This would be my second TP. Okay. So TP2, and then my TP3 will be all the way at the lows. Wait, I think I might have actually been recording this whole time, but I don't know. Okay, I didn't even know now because I see a 2 hour, but it looks like it might be because I paused it. I haven't really used the pausing feature, so it looks like it's recording now. So I don't even know. But okay, my first TP would have been hit. So I'm gonna write it down here. I'm gonna say partials taken. Partials taken. I'm gonna put this like ICT does it, lighter color. Cool. Okay, cool. So this is midnight open. Not gonna be a lot of insight off of that because the market moved up super aggressively out of it. So that's fine. Okay, we're getting displacement lower. Okay, we're gonna get this perfect. Cool. So essentially, both of my TPs would have been hit. So it was not a super it was a little complicated trade here with the little pause that we had, but going to my analogy and how I see the market is that people or the traders on the other side, like the big hedge funds and all this stuff, the people who manipulate the markets, they want to trap as many retails and freak them out because this market is full of emotions. And I can't really say, oh yeah, I would have done this to its T, but this is kind of how I try to see the markets, even when I'm actually trading real money. I try to see it that way, and I know emotions really get into the best of you. So one can say, yeah, you could say this, but this is how I trade personally. If I was actually looking at the market, this is kind of what my inner log is kind of telling me. Okay, cool. This is top. I'm going to wait it out. I wouldn't even move my stop. My stop, 50%, I would just move it either halfway through my initial target or above the CPI. And then once we got the first TP taken away, I would move my stop loss to break even. Then once we got the second TP, I'll move it down to probably above this fair value gap to lock in some profits already. So if they get stopped out, it was fine. Then when the third TP got hit, which happened pretty quickly, I would actually aggressively move my stop loss above this fair value gap. Reason behind it is that all my targets were hit. So after my TPs were hit, I have to take a step back and reanalyze what the market wants to do. So the reason why my third TP was the sell side liquidity, I could actually go on a higher time frame, like a 15-minute. Yeah, I could even say these lows, which would be like the initial of CPI. I don't want to just get super complicated here. So go back on a 1 minute. Either way, it would have hit it. It would have hit my third TP. It's only 5 more points. The reason I would lock out, like once my all 2 or 3 TPs hit, I would move my stop loss aggressively, is because after doing that, I have to reevaluate the whole market. I have to reevaluate my thesis. Okay, my thesis still accordingly to what I was thinking. So if I do get stopped out, it's going to be only for she's like almost like a 23 point gain. So that will be my last stop, but because I already got hit, I'll probably be all out of the market. So on this at 10:46, I would be all out. So I'm going to fast forward and see kind of what happens moving forward. The market retraces. Okay, cool. Okay, we having a little divergence here. This is where you have to look at NQ, look at the dollar, and see what's going on too. Okay. Cool. It looks like here the market wants to actually make a shift upwards. So if I'm not inside a trade, if I'm still inside the trade, sorry, let's say I didn't lock in, I didn't close my position through all these TPs, I would be aware now because we have a higher low form here. A higher low in the form of here to here. So with that in context, I'm like, okay, I'm not scared, but I'm just aware because these are structures that market will signal before it actually happens. So I think we can actually retrace back into probably even the CPI right here. We left the unfilled CPI. So this is kind of what I'm watching, and this is outside the scope of the silver bullet. So I feel like if whoever didn't take a trade from here to here, or from here to here, or here to here, it's now gambling because the market is going to gyrate back and forth, back and forth, back and forth to stop out any people who missed the move. As you can see, it's slower, it's moving higher, going aggressive. So it's just not even moving at all because it's trying to frustrate any traders who are still trying to chase the move that already happened. So, and I was almost one of them. as you can see, I explained what this whole consolidation psychologically would have done to me. I would have panicked a little, not to the extent that I was like, oh shit, I gotta get out, because I seen the moves, and especially because the aggression from this single candle, I can see. I'm gonna actually zoom in here. Shit. Is the aggression from one single candle shows me way more willingness to go to the downside. From here to here, I see more aggression than any other candle. This candle is smaller, this candle smaller, this candle smaller, this candle smaller. Every single bullish candle is much smaller than this aggression candle, or like bearish candle. So in my opinion, there's no need for me to panic, until I start seeing like aggression to the upside. Like if this candle was all the way up here, then I'll be like, okay, cool, let me rethink and really be more cautious, but then other than that, there was no reason for me to panic. This is kind of like a way to stop out retail and make him think, oh shit, the market's gonna go against me. So that's how I kind of see the market whenever I'm trading. There we go. Okay, cool. So I'm probably gonna end it here just because I don't know how long this video is, because I paused it on pause it, etc. So, but this would have been the only trade I would have taken here from this CB. It lined up with the 0.78 fib, and also lined up with an order block. Okay, cool. So targeting the lows, the low of the BISI, and the lows of this sell side liquidity at the lows, which lined up with a 4-hour BISI. So that's kind of where I'm at. I'm probably gonna make another video looking at the 8 p.m. session. As you can see, I didn't really cover the PM session. The PM session even starts. I'm gonna start at 1:30 just because it's CPI and there's probably gonna be a lot of movements going on. But usually I like to watch it at 2. I'm gonna pause it a little. So if I'm honest with you, this whole move, I would have not been able to catch this move, and I would not have been able to catch the first initial downside move. So I know I could have lied to you guys and said, oh, I would have actually shorted this and long this, I would be lying to you. So that's why I made this video, to kind of explain where I would have actually entered, or based on what type of trading styles I like to use. I would have only taken one trade that I actually noticed and I liked, which was a retracement back to this order block, and then a short down until here, and then the TP, the buy side liquidity, and then the sell side at the lows. So hopefully you guys find this video insightful. It's more of a explain my trade perspective, not really like a short video and kind of like see come along. I'm kind of like explaining full detail how I would have traded the CPI. I'm looking forward to see your video, Anthony. So thank you very much. Hope you guys find this video insightful. Talk to you guys later.